Hey everyone, welcome back to Corporate Decoder, the place where we break down the complex world of business filings. And if you thought electronics manufacturing was boring, prepare for a jolt because Vishay INTERTECHNOLOGY's latest report reads like a roller coaster of highs and lows. We're diving into Vishay's quarterly report for the period ending June 28, 2025. Think of this as a quick checkup on the company's financial health. And here's the headline: Vishay's revenues are up, but their profits seem to be struggling. Before we get into the numbers, if you appreciate getting straightforward insights from these filings, make sure you're subscribed. We also have a Discord community linked in the description below where we break down more of these reports, so come join the conversation. First up, the balance sheet gives us a snapshot of what Vishay owns and owes. They have total assets of about $4.2 billion. On the flip side, their total liabilities are around $2.1 billion, leaving them with roughly $2 billion in equity. This means they own more than they owe, which is generally a good sign. Now let's look at their cash situation. As of June 28, 2025, Vishay had about $473 million in cash and cash equivalents, down from $590 million at the end of last year. This drop isn't ideal, but they still have a solid amount of cash on hand. This is where things get interesting. In the second quarter of 2025, Vishay brought in $762 million in net revenues. That's up from $741 million in the same quarter last year. So sales are increasing, which is positive. But here's the kicker. While revenues went up, their net earnings attributable to Vishay stockholders took a nosedive. They made just $2 million in the second quarter of 2025 compared to $23.5 million in the same period last year. That's a massive drop of almost 92%. This means for every dollar of revenue, they are making a lot less profit. They went from earning about 3 cents per dollar of revenue down to less than half a cent. Looking at the first 6 months of the year, the story is similar. Revenues were $1.477 billion, down slightly from $1.487 billion last year. But their net earnings swung from a profit of $54.5 million last year to a loss of $2 million this year. This is a really concerning trend, signaling that their costs are eating up their sales. This brings us to gross profit margin, which is basically how much money is left after paying for the cost of making their products. For the second quarter of 2025, it was 19.5%, which is lower than the 22% they saw last year. This drop means they are getting less bang for their buck on every sale. For the 6-month period, it's even more pronounced, going from 20.4% last year down to 19.2%. This indicates they are either facing higher production costs or have to sell their products for less money. Let's look at their different business segments. In the MOSFET segment, which is a big part of their business, revenues went down by 4.1% compared to last year. Even worse, their gross profit margin in this segment dropped significantly from 13.1% last year to just 6.3% this year. That's a nearly 55% decrease in their profit margin on these products. Their segment operating margin also turned negative to minus 9.7%. This segment is really struggling. The diode segment also saw a slight revenue decrease of 2.2% year over year. Their gross profit margin also went down from 21.2% to 19.9%. While not as dramatic as MOSFETs, it still points to pressure on their pricing or increased costs. For optoelectronic components, revenues were up 2.1% year over year. Their gross profit margin here also decreased, though, from 26.8% to 23.2%. It's still a healthy margin, but declining. The resistor segment showed impressive growth, with revenues up 8.5% year over year. However, their gross profit margin slightly decreased from 22.9% to 22.8%. Also, their segment operating margin dropped from 18.3% to 17.9%. This means despite high sales, they had to work harder to maintain profitability. Conductors saw a modest revenue increase of 1.7% year over year, but their gross profit margin took a hit, falling from 30.1% to 28%. This decline in profitability, despite revenue growth, is a recurring theme. The capacitor segment bucked the trend, with revenues up 6.8% year over year, and their gross profit margin, while down slightly from 23.5% to 23.5% to 21.5%, remained relatively strong when digging deeper into expenses. Selling, general and administrative expenses were $124.5 million in the latest quarter. This is up from $124.9 million last year. While not a huge jump, Vishay noted a $11.3 million benefit from resolving a contingency, which means without that one-time boost, their expenses would have actually increased more significantly. The net loss for the first 6 months of the year stands at $2.1 million. This is a sharp contrast to the $54.5 million profit they had at the same point last year. This turnaround from profit to loss is a serious red flag about their current operational efficiency. Their effective tax rate is also quite volatile. In the latest quarter, it was a whopping 83.7%. This is largely due to the small profit base, meaning even minor tax adjustments have a big percentage impact. Last year, it was much lower at 34.2%. This fluctuation makes it hard to predict their tax burden going forward. When we look at the capital expenditures, Vishay is planning to spend between $300 and $350 million this year. A large part of this is for expanding their manufacturing capacity. This shows they are investing in future growth, which is good, but it also means they are spending a lot of money, which affects their free cash flow. Speaking of cash, for the first 6 months of 2025, their free cash flow was negative $118 million. This is significantly worse than the negative $58.9 million in the same period last year. Basically, they are spending more on investments than they are bringing in from operations, leading to a cash drain. This negative free cash flow contributes to their overall cash position. Vishay is in a net debt position of $435 million as of June 28, 2025. This is up from $298 million the previous year. This increase in net debt, coupled with the drop in profitability, paints a picture of a company under financial pressure. Now let's consider the broader picture. Vishay is operating in a very competitive and cyclical industry. Their sales are sensitive to global economic conditions and consumer demand. The increase in revenue is encouraging, but the dramatic drop in profitability and the negative free cash flow are significant concerns. The company is making large investments in capacity, which is a long-term play, but it's impacting their short-term financial health. Looking at the numbers from a Warren Buffett perspective, Vishay's declining margins and the swing to a net loss are warning signs. While they are trying to grow revenue, the cost of doing so seems to be overwhelming their ability to generate profit. The massive drop in their MOSFET segment's gross margin is particularly worrying. Although they are investing for the future, the current financial performance suggests they might be struggling to manage their operational costs effectively. In the face of market pressures, Working Australian seller rates are a few fashions might be struggling to manage their operational costs effectively in the face of market pressures. So what's the verdict? Vishay is navigating a tough market. They're increasing revenues, which is a positive sign of demand for their products. However, their profitability is taking a serious hit, meaning they are not efficiently converting those sales into earnings. The big investments in capacity could pay off down the line, but right now they are contributing to a negative cash flow and increased debt. Investors should watch closely to see if Vishay can turn around its profitability and manage its costs better. Alright, that's our breakdown of Vishay's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.